When it comes to property investment, one thing separates winners from losers: location. You can have the best house with the finest features, but if it's in the wrong area, your investment could lose value fast. While some people think it's all about the price or the size of the property, they often overlook the one factor that truly drives success: location. Think about it. Homes in prime locations can skyrocket in value, while those in less desirable areas can plummet. So why does location matter so much? Simply put, a great location brings demand, security, and growth potential. In this video, we'll break down why choosing the right location is the #1 rule in property investment and how it can make or break your financial future. Let's break it down in detail. Demand and future growth potential. When considering a property investment, it's essential to evaluate its location in terms of future demand and growth potential. A property located in a high-demand area will naturally see an increase in value over time. But how do you predict this future growth? Key indicators such as infrastructure development, urbanization trends, and proximity to major business hubs can provide insight into the future trajectory of an area. For example, if a new subway line is planned near a property or a major corporation is opening an office in the area, these are strong signs that the location will attract more interest from potential buyers or renters. When an area is experiencing such growth, property values tend to appreciate, providing investors with significant returns. In contrast, properties in remote or less developed areas may struggle to see similar growth, leading to stagnation or even depreciation in value over time. The key takeaway here is to look for up-and-coming areas. These are locations that may not yet be in the spotlight, but are expected to thrive in the near future due to planned developments. Early investments in such areas can pay off handsomely as demand increases and property values rise. If you're able to spot these trends before the mainstream investors do, you can secure an investment that will give you substantial returns in the years to come. Proximity to key amenities. One of the most fundamental reasons why location is crucial to property investment is accessibility to key amenities. These include things like public transportation, schools, hospitals, shopping centers, and recreational facilities. The closer a property is to these amenities, the more valuable it becomes. For example, properties near highly rated schools tend to have a higher demand from families, ensuring long-term rental income and property appreciation. Similarly, being near hospitals, major roads, and public transport systems significantly increases the desirability of a property. Properties in prime locations like this will not only attract tenants or buyers quickly, but they will also command higher rental or sale prices. Moreover, amenities play a critical role in determining the lifestyle appeal of an area. A property located in a vibrant, well-connected area with easy access to restaurants, entertainment, and green spaces is far more appealing to a wider pool of potential buyers or renters than one that is more isolated. Even as time passes, the presence of such amenities will ensure that the demand for properties in these areas remains high, supporting the overall investment value. Economic stability and job opportunities. Location directly impacts the economic stability of an area, which in turn influences the property market. Areas with thriving economies, job opportunities, and a strong local labor market tend to attract both residents and businesses, which boost property demand. Investors should always look for areas with strong employment prospects, as this ensures a steady demand for housing. Cities and neighborhoods with a diverse economic base are often more resilient to market fluctuations, as they are not overly dependent on a single industry. For example, areas with a mix of technology, healthcare, finance, and education sectors tend to fare better during economic downturns, providing investors with a level of security that is crucial when making long-term investments. On the other hand, areas with high unemployment rates or where businesses are leaving may signal potential risk for property investors. These areas may struggle to attract new residents, leading to lower property values and rental income. In essence, by selecting a location that offers a strong economic foundation, you are giving your investment the best chance for sustained growth and stability. Desirability and lifestyle appeal. The desirability of a location can be closely tied to its lifestyle appeal. The way a neighborhood or city is perceived by residents and potential buyers is essential in determining its real estate value. Factors like aesthetic beauty, community vibes, safety, and reputation all play a role in how desirable an area is for investment. For example, areas known for their scenic beauty, rich cultural offerings, and low crime rates tend to attract high-income residents who are willing to pay a premium for the lifestyle that comes with it. Conversely, neighborhoods with high crime rates, poor amenities, or low aesthetic appeal may deter buyers and renters, limiting the potential return on investment. Understanding the lifestyle preferences of your target demographic is key when assessing a location. Whether it's young professionals seeking modern amenities, families looking for spacious homes near good schools, or retirees desiring a quiet, safe environment, the location you choose must align with the preferences of your ideal tenants or buyers. A location that offers a desirable lifestyle can ensure high demand, lower vacancy rates, and higher returns. Supply and demand dynamics. The basic principles of supply and demand are at the heart of any property investment strategy. While demand can fluctuate based on a variety of factors, including economic conditions and interest rates, the location plays a critical role in determining whether demand will outpace supply. For example, a limited supply of properties in a prime location will likely push property prices higher as buyers and renters compete for those available units. This is especially true in urban centers or areas undergoing revitalization. When the supply of properties is restricted in an area where demand is strong, prices will inevitably rise, making it an ideal place for real estate investors to park their capital. On the other hand, areas with an oversupply of properties or in less desirable locations may struggle to maintain demand. In these areas, competition between property owners can lead to price reductions and rental discounts. A strong understanding of the supply-demand dynamics in any given location will help investors avoid areas with oversaturated markets, ensuring they choose properties with long-term value. Market trends and property appreciation. A crucial aspect of property investment is understanding the trends of the real estate market. Location plays a massive role in how quickly a property appreciates in value. Some areas may experience rapid growth in property values, while others may remain stagnant or even depreciate over time. Analyzing market trends in the area you're considering can help you determine whether the property you're eyeing will bring long-term value or be a short-lived investment. One of the key indicators to look at is the historical appreciation rates of properties in that location. Areas that have consistently shown property value growth are likely to continue this trend in the future. For instance, major urban centers, tech hubs, or newly developed neighborhoods often see consistent appreciation as demand outpaces supply. Additionally, areas experiencing gentrification, where older neighborhoods are being revitalized, also show strong potential for appreciation. However, it's important to recognize that location doesn't guarantee value increases. Certain areas, even if they are initially popular or affordable, can lose value over time due to external factors like economic downturns, natural disasters, or shifts in the market. The key to a successful investment lies in forecasting the long-term potential of a location based on current and future developments. By choosing the right location, you'll have a better chance of securing a property that appreciates consistently, providing you with significant returns. The role of government and infrastructure projects. The influence of government policies and infrastructure projects cannot be overstated when considering the impact of location on real estate investments. Government initiatives such as new infrastructure projects, tax incentives, and urban planning regulations often play a significant role in shaping the desirability of a location and, by extension, property values. Consider how the development of transportation hubs like new airports, high-speed rail networks, or new highways can drastically improve access to a location, making it more attractive to potential buyers and tenants. Cities with improved public transit systems or more efficient roads and highways tend to experience an uptick in property demand, as these areas become more convenient to live and work in. Moreover, government-backed projects like green spaces, community redevelopment, and mixed-use developments are becoming more common, and they greatly enhance the quality of life in a location. The growth and improvement of public services, such as schools, hospitals, and police stations, further increase the appeal of a neighborhood, making it an attractive spot for real estate investors. Areas that benefit from such government initiatives generally experience increased property values, making them highly sought after. Demographic shifts and consumer preferences. Understanding demographic trends is another vital factor in determining the right location for property investment. The preferences of different age groups, cultures, and income levels greatly influence the types of properties that are in demand. For example, young professionals may seek out properties in city centers with vibrant social scenes, close proximity to workplaces, and plenty of entertainment options. Meanwhile, families may prioritize access to good schools, parks, and a sense of community when looking for their next home. The population's age distribution also plays a significant role in the types of properties that will be in demand. For instance, areas with a younger population may see a higher demand for apartments and condominiums, while neighborhoods with a larger, older population might have a greater need for single-family homes with more space and proximity to healthcare facilities. Additionally, changing consumer preferences, such as the increasing desire for sustainable living or smart homes, can also influence location choices. Some locations may have a higher demand for properties that incorporate green energy solutions or high-tech features, making them a more attractive option for the modern-day buyer or renter. Identifying these demographic shifts will help you choose a location where your investment can match the needs and desires of the market. The impact of the rental market. Location plays an undeniable role in determining the rental income potential of a property. Investors seeking steady cash flow from rental properties should consider locations with high demand for rental units. Areas with easy access to employment centers, universities, hospitals, and public transport are ideal for securing tenants quickly and minimizing vacancy periods. For instance, university towns are typically a goldmine for rental properties, as students and university staff constantly need places to live. Similarly, properties located near major business districts or hospitals are often in demand due to the constant influx of professionals needing accommodation. Being close to essential services and amenities increases the attractiveness of a property to potential tenants, ensuring a high occupancy rate and steady rental income. On the other hand, investing in rental properties in locations with lower demand, such as rural or less developed areas, can lead to long vacancies and low rental income. Therefore, selecting a location with strong rental demand is just as important as considering the property's potential for appreciation. A well-located rental property can provide a consistent cash flow, making it a reliable investment for years to come. Long-term investment strategy and diversification. Finally, it's essential to recognize that location is not just about short-term gains. It's about crafting a long-term investment strategy. The best location for property investment is often one that offers both capital appreciation and the ability to diversify your real estate portfolio. By investing in different locations with varying characteristics, you can mitigate risks and ensure stable returns in the long run. For example, investing in both urban centers for short-term gains and suburban areas for long-term growth can help balance your portfolio. Urban areas may provide faster appreciation rates, while suburban areas often offer lower entry costs and the potential for steady, long-term growth. Diversification also allows you to target different types of properties, such as commercial real estate, single-family homes, and vacation rentals, further ensuring the sustainability of your investments. Moreover, by considering international markets, savvy investors can tap into growing economies outside their local areas. Cities in emerging markets, whether in Asia, Africa, or South America, are becoming increasingly popular for investors looking to capitalize on rapid growth in development. Choosing diverse locations, both locally and globally, is a key strategy to ensure your investments remain robust, even when local markets face economic challenges. Outro. In conclusion, location is undeniably the most important factor when it comes to property investment. It influences nearly every aspect of the market: demand, value appreciation, economic stability, lifestyle appeal, and even rental income potential. A well-located property offers long-term security and high returns, making it a smart choice for any investor. By carefully analyzing location factors like proximity to key amenities, government projects, market trends, and demographic shifts, you can ensure that your investment is both profitable and sustainable. Choosing the right location for your next property investment could make all the difference. Whether you're looking to build wealth through capital appreciation or generate steady rental income, location will always be the driving force behind your success in the real estate market. If you found this video helpful, don't forget to like, share, and subscribe for more powerful insights into real estate, investment tips, and luxury property breakdowns. Your support helps us bring you even more high-value content just like this.